and welcome to the Wrap Up to Your Retirement podcast with your host, Dan Reese. Dan, welcome to 2025, my friend. How are you?
I'm great. I'm looking forward to 25. Get warm. Once it warms up in Michigan, it'll be really great. So
once upon a time when I was a reporter, Dan, I did have to go to Michigan several times. Unfortunately, I was never in Michigan when it was warm. So I always think of Michigan as being cold.
Yeah, it's beautiful. I mean, once it warms up, you couldn't be in a much better place. You know, lakes, golf courses, just all kinds of beauty up north. And but in the wintertime, I'm not a snowmobiler or a skier, so it's like it kind of takes away some of that fun for sure.
Yeah, no, it is, and I mean, there was a state motto, right, about beautiful Michigan.
Yeah.
In terms of keeping it clean and keeping it fresh, it is. I've seen the beauty on TV. I just never experienced it in real life.
Well, that's unfortunate. You got to come in the summer.
I do. I need to come up there in the summer. So, on the table today is planning, which is appropriate. Yep. You're a financial planner, so I think. Planning for 2025. What kind of tips do you have for us, and how can you guide us through getting us ready for the year to come?
Yeah, so we're going to kind of take an approach this year where kind of baby pieces throughout the year. And so you'll note today I'm going to just walk through a high level of each month and kind of things that we think are important to focus on.
Okay.
And the reason we're doing it that way is because what we found by talking to a lot of different people out there is that this stuff's overwhelming. Like, I don't want to do all this stuff, right? And so this idea is, well, let's break it into some small actionable pieces. And that way, you can just do a little bit at a time and not get overwhelmed. And hopefully by the time you look back 12 months down the road, you're like, wow, I've made some really good progress. And I feel a lot better about my money than I did January 1st, 2025. And so, today we're going to really just spend time going through kind of on a month by month what we're going to address. And this is a downloadable piece as well. So this will be in the show notes. Well, also there's a link on our website you can get to, but it's just called the 2025 calendar, key tasks and financial dates.
Nice.
So it's really just a way to kind of like slowly but surely, get through all this stuff around money within a 12-month period.
So hopefully by breaking it down in little pieces, it's not some big overwhelming, oh my God, this is what I have to do kind of thing.
Yeah, 100%, because that's what we've just found. Like even when people come in to see us for the first time, they're like, do I have to bring loads of stuff? And we're like, let's just go in and talk for a minute first before we start going through all the realms of paper we may have somewhere in files in our house, because it can be scary, intimidating, and we're trying to make this doable, right? Because, the whole thing is it's about action at the end of the day, right? We can talk about stuff all day long. If you never do anything, I can, it's the same thing. I can watch other people work out, but it's not going to help me a whole lot, right? So,
well, there are people at the gym that seem to do that. So I don't know, just watch other people while they walk around. But,
yeah.
So where do we start?
Well, January. So our big thing in January is, first of all, it's just kind of starting off with some goals, right? Mm-hmm. And so I'll give you some examples, especially if you haven't really done this before. Maybe your goal is, hey, this year I've got a goal of getting my financial house in order, really getting a better understanding of where I am today, right? And we're going to talk through these things. But as you go along, there's lots of goals, and we'll talk about them in future episodes as well. But goals like what are goals for the current year that cost money? It could be, hey, we need to put a roof on the house. It could be we want a family vacation. We want to rent a house, for everybody to go to on Lake Michigan or something, for a week this summer. And then goals could be more longer term as well. Things like, retirement. What would be an ideal goal for retirement? And there's a lot of power in taking out a piece of paper and starting to write some of these things down. And we always kind of encourage people to think of both quality of life things and long-term financial stability things, right? So, the now and the later, and also breaking that into time frames. What's something that is now? Like I said, maybe the roof or a vacation. What's 3 to 5 years down the road? What's 10 years down the road? And start just thinking at a high level, because you can't get there if you don't know where you're going, right? So that's that idea in January. Let's just set some goals so that we can, start getting some idea of what we want to be able to do with our finances.
All right. So that takes us up to February. What do we do? Where do we go from there?
Yeah, February, really, we start getting into what everybody loves, tax time. And actually, a lot of people do love tax time because several people we know get significant refunds, right? And that's a whole different topic, whether you should be getting a big refund or not, and how to pay your taxes throughout the year. But really, February is all about getting organized, right, with the stuff coming in. So one of the things that's become a lot more of a challenge around that, it used to be you just waited by your mailbox, right? And the stuff just came. You're like, oh, there's that 1099, there's my bank interest statement, if I have a brokerage account, whatever it might be, my employment forms, all the things that come. But now we know there's other issues, right? Because so much is electronically delivered, right? And so I really, really encourage everyone to think about what are all my financial accounts, or where are areas that I may have received income or, sources of income. And again, get out that piece of paper or a spreadsheet and start typing or writing those things out. And then looking to see, did I get Avery tax form on that account? Now, not all accounts you're going to get tax forms on. If you have an IRA and you didn't take any money out, you're probably not going to get anything. If you put money in, you may get a tax form, but maybe not at that time of year. Could be something that you get closer to May. But the point of it is that if you've got all those listed out, that's even really helpful for your accountant, right? If you have somebody doing your taxes, and they can tell you, well, you should have got something on that and you didn't. Because the other issue we have is, I know because the mail service has tried to be a little bit more effective with how they operate, there's not a mail center in every town. It's so mail, there might be for us, might be Lansing. And so it does open the door for more things maybe to not get delivered, or be delivered late. And so you don't see them, or you, for some reason, don't get it. And so you just have to be aware of that when you're preparing and organizing those tax documents. Mm-hmm. Just make sure that you've got something for all of them. And if you're not certain whether you should, you can always call that place too. If you've got an account and say, hey, did you guys send anything out to me on this? Just to make sure you have it. But that organization's key. And then what I always tell people, the first year is the hardest because you're trying to get all organized. But after that, you should be able to take out that same document and kind of say, hey, did anything change?
Yeah.
Do I still have that account? Did I get any new accounts? So you're starting a lot further along than you did the prior year.
Well, it's really interesting because most of my information is delivered electronically. There are still some things, and I'm thinking mainly of state documents, which seem to be not delivered electronically, that I have to make sure I've gotten in the mail. But yeah, that's good to have a checklist so that it's yep, I got those things, and we're moving down it. You have for March one I want to talk a little bit about, which is calculate your personal net worth. I always have thought of that as sort of a kind of running tally in your mind so that you just know where you are. Why do you say, let's do that in March? What's that about?
Yeah, I mean, that's just kind of a natural progression. You get your tax stuff around. You're kind of in the idea of seeing where everything is, all your accounts and all those things. Okay. But the thing with net worth, it changes every day, right? Markets change, investments change, and all those things.
Exactly.
And my big point to all our clients around net worth is that it's a tool to judge over time how you're doing, right? We're hoping that our net worth is growing. So what is your net worth? I mean, honestly, it's what you own minus what you owe, right? I mean, it's pretty simply. So what do you own? Well, I have a house and I have these cars and, and I have these bank accounts and investment accounts and a 401k or whatever it might be. Maybe you have collectibles, but the big thing is that then you take away the stuff that you owe. So I have this car loan and I have this mortgage and all these things. Now, your net worth statement is simply the balances. Sometimes people get confused with a cash flow statement versus a net worth statement, right?
Good point.
So the net worth is just what is the balance on or the value of what you own, subtracting out what you owe. And that gives you that idea. And when you're starting out, guess what? It might be negative. I mean, that's really common. You might have college loans, you might have some things that you haven't paid off yet, and you may have very few assets coming out. But it's okay because you're trying to take a picture of where you are today, right? And then look at it over time as to how that is changing, right? And so most people have Excel nowadays. That's a pretty easy way to do it. You can even search on Google, hey, a net worth calculator, and there's all kinds of free templates out there that you can use to calculate all that. But if you do a new tab for each period of time, let's say you do it every 6 months or even a year, and see how am I progressing, with my overall net worth, that's really where the value lies.
So just as we talk about net worth, along comes April. Everybody's favorite month of the year.
Yeah, for sure. I mean, that's tax time, right? April is tax time, but it's not just tax time. It also is the deadline to make IRA distributions typically for the preceding year, right? So you have up until tax filing date, generally speaking, to make that IRA contribution for the preceding year. So like we are, the preceding year now is 2024. If we haven't made that and we're eligible, then we need to get that money in if they're going to credit it to that year by tax filing time. Mm-hmm. So that's really an important thing to remember. But I think the big thing with taxes is that, we talked a little bit about it a minute ago, is just like understanding when you file taxes, most people in the U.S. are paying their taxes through like payroll deductions. So like They take money out when they pay you, they submit it to federal and state tax. And then at the end of the year, when you file your taxes, you kind of see, hey, did I pay in too much or did I not pay enough, right? Well, that's something and then there are people that make quarterly payments where it's more like, 4 times a year, they're sending in money just by check into the state and federal government to take care of that liability.
And those people typically are people who are self-employed, right? Or own their own business.
Yes, they typically are self-employed. There's some unique circumstances where maybe they give some, other assets that are creating income and their payroll tax isn't covering it. And so an accountant might tell them, hey, in addition to those, let's send a quarterly payment in. But you're right, typically that's correct. But the one thing we want to be aware of is two things. We don't want tax surprises, right? We want to make sure that we're in alignment and we're close to, not getting a huge refund and not owing a bunch of money, right? That would be ideal. Mm-hmm. And then the other thing is just kind of in a line of getting too much back. So, if you're getting a bunch of money back, I know some people love it. And I mean, I think, and it's like, oh, that's my vacation fund or whatever. That's okay. But understand, especially now that some online banks might be paying 4% interest, you'd really be better off saving that money every month if you could get in that habit and then not getting as big of a refund when it's time to, file your taxes.
Yeah, the government does not give you any return on your money.
No. And so that's just something you really want to consider, and you want to make sure, and we're going to talk about a little later, is like reviewing where you are during the year, because you do want to make sure, especially if you use an accountant, it's not a bad idea to say, hey, I'm at a certain point in the year, here's what I've made, here's the taxes that have come out, so they can make sure you are on track. Mm-hmm. But that's the big April, is understanding your taxes and where you sit, and if any adjustments might be needed moving forward to make sure that you're not getting a huge refund or you're not owing a bunch of money when you do file those returns.
Very good point. Where do we go after we've paid our taxes, dear Dan?
Yeah, once we pay taxes, and what's good is because a lot of people do get refunds, so this is a great time to review your debt, right? So debt continues to be an issue in the U.S. We kind of are a debt society. We tend to take out loans on everything and instead of paying in cash. And so really it's a good practice at least once a year to list it all out. List out how much you owe, who it's to, what is the interest rate being charged on that, right? And then, there's a lot of programs out there. Dave Ramsey has a great way to snowball your debt. There's a lot of different ways to attack that in order to get that paid down. But you really need to take a close look at it. And then if you are getting a tax return, maybe understand, hey, what could be the best use of that money? Where's the highest interest and things. And if you do have a lot of those like credit cards and things like that, sometimes you can consolidate some of that and get a better interest rate, at least for some period of time, right?
Yes.
And then work to pay that down during that period of time. But I really defer to some of the programs out there like Dave Ramsey if you feel you have a debt issue to get that under control, because you really are spending a lot more money on things than what they should cost, right? At the end of the day, if you're paying a bunch of interest over time.
Yeah. No, it's true. And I don't think people realize how much money what the interest they pay on their credit card debt is.
Right.
And if they don't, I would encourage them to look on their statements to realize they are paying huge interest rates. You're making credit card companies richer, not yourself richer, by carrying carrying all that debt on credit cards.
Yeah, no question. Typically, many times 20, 22%.
Yeah.
It's just a huge amount of money that's going out the door. So getting out of that cycle and evaluating that and then making a decision to improve that can be make a huge impact on your family for sure.
It's true. Your tip for June, I really, really, really like. I'll let you explain why, because I know what you're going to say on this one.
Yeah, we're talking about reviewing automatic payments and investments, right? So like we do live in an auto pay world. There's no question. Some of those are really good, like auto pay to your IRA or to your Roth IRA or some investment. That's great, right? Because it happens automatically, right? What isn't so great are some of the things that we often even forget about. I've got friends, we always joke around like, I've got 3 kids, and I don't know how many streaming services we might have between Netflix and some Paramount Plus and all these things.
They add up. We laugh about this, but when you add Netflix, you had Prime, you had Disney, you had when you add all of those things up, they add up.
They add up, right? And if that going back to the debt, you might say, "Oh my gosh, I just freed up $200 a month," and I'm not joking. Like it could easily happen to go towards that payment. But I think the big thing is again, moderation, understanding what you're paying for on an automatic basis. Go through your credit cards, go through your bank statements. And then if you're like, hey, I can get by without that for a while. And the beauty of a lot of these subscriptions, they don't care if you stop them. You could start them back up in 4 months. There's no penalties or anything. And if you do those things, what happens is that you might say, hey, we don't even watch this in the summer. Like, why are we keeping this all summer long when we're outside all the time and we don't even have it on? And so just be aware of those things. So it's a great thing in June just to review those things. And then on the other side, the investments, always keep in mind what the new IRA limits. So like, let's say you're funding your Roth every year. And so if you're over 50 now, it's up to $8,000. So am I getting that in there with my monthly? Am I short of that? Can I make any changes to make sure that gets fully funded? We don't want to get in that situation where it gets to the end of the year and we're like, oh, crud, I could have put another $1,500 in there, but then you really don't have it, right? And so we want to make sure that that's automated as much as possible.
So where do we go from here, Dan? We're halfway through the year.
Yep. In July comes right in line with once we've done those automatic payments, right? And we've kind of looked at our debt. Now we can revisit our budget. So you can see we're just taking one thing at a time. Let's just do one thing at a time. You don't have to do this all at once. So the budget piece of it, you're going to take into consideration, what was my tax situation? Did I need to adjust that, right? Because that's going to affect your cash flow, right? What was my debt situation? Did I, were there things that maybe I could pay down, consolidate that would change that amount? Or do I need to really apply extra money to those things to get it taken care of quicker? And then you looked at your subscriptions and automatic investments and things. So what changes could have been made there, right? So all that comes together and culminates with kind of your overall budget. So you take all that information and then reallocate the money you make, right? And see how you can maybe optimize that a little bit and make sure your debt's getting paid off, that you're not spending too much on frivolous things that you don't maybe even use, and that you're consistently saving. So that's a huge thing in July where you're trying to bring it together and really, get ownership over your money.
Along with revisiting your budget and reviewing your debt sort of comes the next little small task in August.
Yeah.
Which is the idea that it's maybe we need to make some adjustments here, tweak a few things, right? Yes.
Yeah. And that's the one thing that sometimes gets forgotten, right? We call it time to tweak. And that's not a funny dance. That's not, the kids would laugh
not
at
to
me
be
probably,
confused with twerk.
Right. Or tweaking or twerking. I don't know all those things, but regardless, it's really about looking at where you are with your overall, you look at budgeting, you look at your tax withholding, you look at, all those things. You're like, okay, let me look at my paycheck. What's coming out of there? What adjustments? And so really making sure you're in tune with everything that's happening month to month. And, I love that one because the taxes are a good one. Like you had your tax return done. And by the way, we all know that many times you can't really talk to your accountant right when you do your taxes. So it'd be a time where, hey, now I can actually have a quick call with them and say, hey, here's kind of where I'm at. I know I ended up owing a little bit last year. Does it look like I'm still going to do that? Should I change that at all? Because, those things are pretty easy to adjust. But that's really what August is about, just really taking a look at those things and making any quick adjustments that you need to stay on track.
I typically think of fall as a I know it's a shift in seasons, but if for some reason in my mind, it probably from years of that's when I started school again and that kind of thing, and when my kids started school. But I always think of September as a sort of new beginning. It's a refreshment, if you will, as we enter into fall,
Yeah.
which I think fits really nicely with this tip.
Yeah, the next thing we recommend September, now it's time to really look closely at your portfolio, right? We want to make sure things like, hey, maybe we should retake a risk questionnaire and make sure our portfolio risk level is in alignment with how it's invested, right? There could be some opportunities for tax loss harvesting, which just means maybe there's some positions in there that have lost money. We need to revisit those and say, hey, is it a good time to maybe sell those and reallocate to some other things, right? We can look at things like, our total funding plan. Hey, is that really getting us where we want to be when it comes to our investments? What money's going in? Where's it coming from? Are we funding Roths? Are we funding IRAs or 401ks? And what's that overall plan? But really, that idea of a portfolio examination is just looking in detail of how your money's invested, any tax opportunities that might exist within that, and how are your investments being funded. Now, if you're in retirement, that would be also how is it being withdrawn, right? So maybe you're in a drawdown period. But all those things still kind of come into play. Same idea, except instead of putting money in, you may be taking money out at that point.
So that brings us to the final quarter of the year. Where do we start with in October?
Yeah, now we're going to get into more of maybe not so much things you think about and people neglect oftentimes. It's like, let's look at our health insurance. So let's analyze our health insurance coverage. So you're kind of running in, and we're going to get into employee benefits in November as well, but health benefits, whether you're Medicare, whether you're on traditional, buy it in the marketplace, or you buy it or you get it through work. Most people have choices, right, in each of those platforms on what they buy. And so when you look at health insurance, like I'm a big proponent in saying, what is your true need? Like, are you someone that, maybe you have a lot of health issues where you're frequently at the doctor? You want to make sure that your coverage is going to provide the least out of pocket at the end of the day, right? Maybe you're pretty healthy and you really get your physical each year and you don't tend to have many other needs at that point. Maybe like an HSA plan or something where, you can save some extra money, but not put yourself out for major losses would be appropriate. So there's all these different, if you're on Medicare, there's drug plan reviews. There's a lot of different things you want to look at. Mm-hmm. But the point of October is just take a close look at what your coverage is, what your needs typically are, and make sure there's some alignment there. Because at the end of the day, you want to optimize that money you're spending on that resource. You don't want to buy too much. You don't want to not buy enough, right, when it comes to that. So finding what really fits your needs is key in that October period.
Yeah. And it's funny, you mentioned review your employee benefits or employer benefits. I'm kind of curious what you mean by that in November. What are you talking about, Dan?
Yeah. So when you think about that, most employers will around November, they'll put out like to basically re-sign up for all your benefits through work, right? So that could be everything from your health insurance, which oftentimes will have a few options. You could have disability coverage, life insurance coverage. There's other cafeteria plans where maybe like childcare assistance or, it's all over the board. Every employer is going to have different things available. Mm-hmm. But I think oftentimes people don't necessarily take some extra time and really look at those closely and say, what again is going to fit me? Like, am I getting the free life insurance on my whole family that often exists, right? Could I possibly buy some extra life insurance? Most people are underinsured from a life perspective. And could I buy it really cheap through work? Sometimes for, 10, 20 bucks a month, you get a lot more coverage, right? Yeah. So your family will never be mad at you for having extra coverage if something were to happen to you, right?
So true.
And then there's other things too, like 401k contributions. Do you want to make adjustments to that? A lot of plans now have Roth 401ks. Are you familiar with that? Would that be a good fit for your family based on your current income? And so really, those employer benefits are a huge, huge thing. And I think a lot of people underestimate the value of them. And so you just want to make sure that you take some time. Most companies have decent human resources where you can call and ask questions if you don't understand something. Or a good certified financial planner oftentimes will have experience with that as well and can give you some direction on what might be a good fit. That's another reason we talk about financial coaches and some of the benefits there, because as you work with someone over long periods of time, they get to know you, they get to know what your needs are, and it's a lot easier for them to give you good advice on things like your employer benefits.
Well, good. We've got them all. We've got 11. We're down to number 12, and then we'll be talking 2026.
That's right. And 12 is kind of sometimes the least favorite for people, but I did want to touch on it because it's your property and casualty insurance, which in layman's terms, that's your car and auto, right? Typically speaking, boat, if you have a boat, things like that, ATVs. And this is super important. Just a couple of things I want to mention on this. One of them is a lot more people have things like golf carts and ATVs and some of those toys nowadays. Making sure you have proper liability coverage. If the property itself isn't insured, meaning let's say that golf cart costs $8,000 and it gets totaled out, well, you're out $8,000. Well, you don't really want to be out $8,000, but it's not going to end your life. If you hit somebody with that golf cart and seriously injure them, it could be hundreds of thousands of dollars, right, in a lawsuit. Understanding that your things like that are insured, understanding collectibles, or if you have some nice jewelry or things that maybe don't have great coverage under a traditional homeowner's policy, understanding if you have a business interest, like, I have this business on the side, I do this woodworking, I make furniture out in my barn burns. Oh, that might not be insured, right? Unless they knew and had proper coverage for a business interest. So my point is that really you need to understand what risks you have. It's really worthwhile to sit down with your agent, your property and casualty agent, and talk through your lifestyle and the things that you have and the vehicles you have and the collectibles, and just making sure you don't hide stuff. Because the thing is, people think sometimes, well, if I don't tell them out, it'll be fine. And then you have that claim and it's not covered and it's just a bad situation. And then just the biggest thing I recommend to everybody, seriously consider a liability umbrella policy, which is just liability coverage that sits on top of your cars and your house and your other things.
The liability insurance, is that sometimes referred to as an umbrella insurance policy, or is it?
It is.
Okay.
Yeah. So like the total, like long form personal liability umbrella policy, and a lot of people will refer to them as PLUPs. That's kind of a common shortcut name.
I like umbrella better than plop, but okay.
Yeah. But they're, typically they're $1 million or $2 million or $3 million, and you have to look at your own situation to determine how much coverage would be appropriate. But I highly, highly recommend that you consider those because it's something that's just so important. And that's just something your property and casualty agent can kind of explain and see what your situation is. But again, a certified financial planner does have experience in that stuff as well. We can give you some counsel on that, but ultimately you need to visit with your insurance agent to actually purchase those things,
So is there anything else that we need to be aware of, cognizant of, or know about in December before the year ends?
Make sure you don't blow the holidays, do a good job.
Well, that's
with gifting and things.
That's easy to do, unfortunately, yes.
Yeah, but overall, I think the thing is like, I know this seems like a lot, but the idea, going back to what we talked about, is take it 1 month at a time. Just try to do one thing. You know what I mean? Don't try to get overwhelmed doing it all at once. And as you start working through it and you're starting to make progress, I think you'll gain momentum and you'll be like, okay. And never, ever hesitate to reach out to a certified financial planner and say, hey, you know what? I think I need some help on this. I just saw that the CFP board sends out emails. There are over 100,000 certified financial planners now, which is awesome. Like, it's a big landmark. So there's several of them out there. And we just highly recommend that because they do have experience and education around all these things that we've talked about today.
That is great. And it's a nice list. It's not a scary list. It's a doable kind of bit by bit sort of thing that people could do. Dan, for people who are listening to this podcast who've not had a conversation with you, aren't a client of yours, how do they reach out to you? How do they maybe strike up a conversation to see if they want to have some sort of relationship with you and their money?
Yeah, I mean, the first thing, we have a great website. Like I tell everyone, if learning is important to you and you're kind of like, hey, these are things I'd like to know more about, go out to our website, hit the Insights tab on top. There's so much great information. There's tons of this list we're talking about's there, like as a downloadable, and we update things every month with new resources that you can download and read through. We've got upcoming podcasts that'll touch on other resources that you might find helpful. But that would be the first thing. And then the second thing is, like, you can always reach out to us by phone, 517-783-1695. All our contact information's on the website. There's a contact us button on the website. You literally can just type in your stuff and we'll reach out to you and just make sure your questions are answered and talk to you a little bit about what we do. But typically when people come in to see us, honestly, Bill, it's a pretty low-key conversation. We're just trying to figure out, what's on your mind? What do you have concerns about? Are there things that we may be able to provide some direction and help? Or is it maybe stuff that we could point you in another direction where you could get that help? But ultimately, we want everyone to have success with their money and feel good about it. Because, it's just a stressor that everybody kind of deals with. So it's a matter of finding the right resource in people to help you feel better over time, with the choices you're making.
Excellent. The other thing you can do if you're listening to this podcast and you're not a subscriber, hit the subscribe button, hit the follow button. That's easy. That's almost as easy as hit the contact button.
Yeah,
as a matter of fact. Do that, because then every time a new episode of this podcast is released, you'll be notified and you can give it a listen. The other thing I would ask is, if you like the podcast, if you find the information in it is helpful and useful to you, tell other people about it. Share it with folks. Word of mouth promotion is a very, very welcome promotional tool, and we very much appreciate it. So until next time, I'm Bill Tucker. On behalf of Dan and everybody at Avery Wealth, thank you for taking the time to listen today. And remember, you can go out today and make today a great day, or not. It's your choice. Have a good one. Until next time. Thank you for listening to Ramp Up Your Retirement. Click the follow button to be notified when new episodes become available. Visit our website at www.averywealth.com or give us a call at 517-783-1695. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Avery Wealth. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning.